Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
Tonight, we now have 2 consecutive quarters of negative GDP. Are we now in a recession? The Federal Reserve raises interest rates another 75 basis points. And West Virginia's Joe Manchin agrees to a new spending and tax package on energy and climate change. Will taxes be going up? We have that and more tonight on this Friday, July 29th, 2022. Hi, I'm Andre Laborde. Welcome to Wall Street Wrap-Up for this Friday, July 29th, 2022. I hope your week went well. Well, coming up tonight, we're going to be talking with business and have a little fun with a good friend of ours, Tulane Freeman School of Business, Peter Ricchiuti. Peter's been a finance professor at Tulane for over 36 years. He is the founder and leads their nationally known Burken Road Reports and even does a weekly radio and podcast show showcasing local entrepreneurs in the area. Peter's always been a giver, well, and he's going to be giving us some time tonight. Peter Ricchiuti will be with us in just a moment. But first, how did the markets do this week? Well, all the markets ended up for the week and for the month as well. And the NASDAQ ended the month up over 12%, with technology stocks having their best week in months. And this week, the Dow Jones ended at 32,846, and it ended up almost 3% for the week. The S&P 500 closed at 4,130, and it was up 4.25% for the week. And for the NASDAQ, they ended at 12,390, which was up 4.7% for the week. Well, today was the last day of trading for July, and all the indexes ended in the up position. Well, I was trying to think of the best way to introduce my guest tonight, who I've known for almost 4 decades. I thought about how he's in demand as a lecturer around the country, always talking about how finance can be fun. Or he is the author of the book Stocks Under Rocks. Or as a finance professor at Tulane, he founded and leads the well-known Burken Road Reports. But he was elected twice as the best teacher at Tulane Freeman School of Business. But I guess the best way to introduce Peter Ricchiuti is to say he's the kind of professor you wish you had when you were in school. Hi, Peter. Welcome to Wall Street Wrap-Up.
Wow, nice to be here, and we've known each other forever.
We sure have, many decades, and I am so glad to have you on the show for this weekend. This week, especially because the Federal Reserve raised interest rates another 75 basis points. So this makes 2 3/4% rate hikes back to back. Now, I don't remember ever when that happening. I mean, I'm sure it has at some time or another, and I know they're going to raise interest rates more throughout the rest of the year. But do you see interest rates being raised another 75 basis points?
Well, it could be, Andre, but see, I started in the business in 1979 when mortgage rates were 18% and all of that. Most people have not been through a high inflationary area. I get PTSD just thinking about it, really, what everything that went on. But I think we'll have a couple more rate hikes, and it's working. People that complain about the Fed raising interest rates, you have to remember this is what they're trying to do, is to slow down the economy. Let's face it, the real estate market was white hot, was probably much hotter than it should have been. There were stocks that were overpriced. And this is all bringing it back to earth in here. But if you remember, we turned into a bear market last month. And people, all scared and everything. But the average bear market is usually, about a very short period of time. And then you start to come back very quickly. The biggest mistake people make is they get out of the market when things look bad. And they say, I'll get back in when they're lower, and I'll get a good bargain out of it. And the bottom line is nobody ever gets back in. The market is ahead of the economy by 6 to 9 months, and they just can't pull the trigger again, and they miss tremendous rallies in the market. So it's really best to stay put. Everybody thinks they can time the market, but nobody can time the market.
Right. I always say the line by Bernard Baruch, the investor in the 1920s, the 1930s. He said the only people that can time the market at the lowest and at the highest, they're known as liars. So it was true in the 1920s as it is in the 2022 area.
Absolutely. And I'm always hesitant when I meet people that manage money and they tell you only about their winners. It's like,
Well, you know, you were talking about the red-hot real estate market, and for the longest time with low mortgage rates, the real estate market was hot. But there was a report that came out this week that of sales, they're going down around the country, in the South and the Midwest, and in the West Coast and such. So, do you think that the Federal Reserve is wanting to slow down the red-hot real estate market?
I think they are, because they saw what happened in 07, 08. We just fell off a cliff, and they'd rather ease this down. Let's face it, most people are being priced out of the housing market. And now that you've taken some of the fluff out of it here, it's really become a better time for people that are looking for a house. And these rates, by the way, Andre, they're not high in a historical sense. The 10-year Treasuries are just below 3%. Historically, the average has been 5.60%. So we're not talking about higher rates. We're just talking about higher rates. I think we all got maybe too tied up in the very, very low interest rates we had here for a long time. And I don't blame the Fed at all. And first of all, I think we should have faith in the Fed. I mean, I have former students at the Fed. I have friends at the Fed. They're smarter than me. They're better dressed. They have less body fat. This is the right crowd. I worry when politicians want to start advising the Fed. That seems like a bad idea.
I was listening to Sheila Blair this week, or maybe it might have been late last week, and she was comparing with the Federal Reserve, this Federal Reserve, as compared to the same with the one with Paul Volcker, as when you started off in the late 70s, 1980s and such. She was saying that there was, at the time in the late 70s, in the early 80s, there was so much money sloshing around that what he did was, Volcker, he was taking the money out of the system and trying to do it this way, as compared to this Federal Reserve, where they're not taking the money, they're raising interest rates,
right,
but with the bond money that they kept pumping in, they're not doing it fast enough. Now, that's one person's opinion.
Right, that's the argument.
What's your opinion on that?
Well, the people are just saying they raised interest rates not too long ago, starting the first of the year, but they've been buying back, they've been actually selling bonds into the market for over a year now. Mm-hmm. And I think we're very close to peak inflation, and I think we're very close to peak fear. And that's always the time to buy stocks. If you look at it, whenever you hear about everybody going into an asset class, it's the complete wrong time. It's like, for the last 2 years when I give speeches, all people want to talk to me about after is Bitcoin and weed stocks. And you just can't think that's the place to be. And right now, nobody's asking me about good quality stocks with management that own a lot of the company's shares in their own account, with good balance sheets. And that's the thing to be looking for. It's not very sexy. I mainly get all my information like this out of crawfish boils. Be honest with you, when I hear somebody saying what to buy, I usually go home and sell it. It's a very rough road, but no, I've been in this business for 43 years now, and it repeats itself. It doesn't exactly, but it does rhyme, and you can just kind of see these patterns over and over and over again. So, and I don't think inflation is going to be out of control. You've got supply chain issues are going to get solved. Oil prices will not stay up this high. In fact, one of the problems we have in Louisiana right now is we get the worst of both worlds. We're paying a lot at the pump, but there aren't a lot of new jobs like we usually see in Louisiana when rates go up. And one of the reasons when, you're close to $100, but one of the reasons is that I don't think anybody thinks these rates are going to hold. But you're not seeing a ton of money going into the deep waters of the Gulf of Mexico, because picture it. You're going to spend a couple of $2 billion doing that. And from the time you lease it to the time that oil gets back to the refinery, could be 5 to 10 years. If you're an MBA and you're being asked to spend your advise on a $2 billion spend, and you say, what are you going to get at the end? It's like, well, I don't know, maybe $1, maybe $100 a barrel. That's a tough way to live.
Peter, that's an interesting point you bring up about, how things do rhyme. I mean, you've been in the business for 40 years. And I know you know this portion too. What are the four most dangerous words in finance?
They are. This time it's different.
That's right.
Now the 7 most dangerous words overall are, hey, we're getting the band back together.
For the first half of 2022, there have been so much sell-offs, and I mean the tech sector especially has been heavily hit. Let's say the stocks were frothy or expensive at one time in January or February. What about now? Do you think stocks are more an attractive buy today than they and a good time to like a sale at Macy's?
Well, you know, that is true. People don't want to own stocks right now, but they are less risky because the prices are down. And, you know, we have a bear market on average about every 3.5 years. You just got to be able to live through them. I think people ought to either stay invested or use this as an opportunity to nibble around. You've got great companies that are down 30, 40, 50%, and there's nothing really that's changed in the company. And I think now that we've started to see money go away from the really speculative stuff like Bitcoin and NFTs and all that kind of stuff, I think there'll be a return to sensible dividend-paying stocks as investments. It just seems really boring now, but boring's good.
Yeah, boring is good. Yeah, I'm sure you get asked, because I get asked all the time about this, about Bitcoin, cryptocurrency, and such. Let's say if you were one of the smart ones and you bought Bitcoin like at $10,000, okay, and right now it's trading at maybe 21,000. Basically, you're making money. If you go to, let's say you go to Starbucks and you buy a cup of coffee, with Bitcoin, do you have to pay capital gains on that?
Oh, I can't imagine. I don't know what on earth. I've made a point of not knowing anything about crypto. It's, I just, you know, it sounds to me like the tulip bulb mania, you know, in Holland, except for then, you at least got pretty flowers.
Exactly.
And
Charlie Munger with Berkshire Hathaway, you know, I mean, he calls it a lot worse. I mean, I think he used the term rat poison. But like Warren Buffett said that you're buying something in the hope that somebody at a later date will purchase
pay a higher price for it.
At a higher price, right. And at least if you buy, like, say, a Van Gogh, or you buy a painting of whoever it is, well, you can hang it on the wall and you look at it and you go, oh, isn't this pretty? But you wonder if whether or not with Bitcoin, I just can't, unlike a stock, which is a company, I can evaluate earnings, potential growth.
Assets, book value. You have a reason to believe there's a bottom.
Yeah.
And here, I just don't see it. And, but, you know, with our students at Tulane, obviously, they ask about those kind of things, but we're doing old-time fundamental kind of Ben Graham, Warren Buffett kind of research. So we have 200 students every year. We break them up into teams of 5, and they have to write an investment research report on that company. And what we're looking at is small companies in the South that just don't have a lot of coverage. They're big they're of decent size, and they're headquartered down here, but they don't get any attention on Wall Street. We call them stocks under rocks. And are
these publicly traded companies?
Publicly traded companies, and they get no attention. And we go in there and we write the report. We spend a day with the CEO and the CFO. We go on site visits, the best in the world. We've taken helicopters to offshore oil rigs. We've gone to steel mills. We've gone to chicken processing plants. Andre, if you've never been to a chicken processing plant, do take the family. That is a nice outing.
Yeah, I'm planning the next vacation there, Peter.
It's not far, really. It's not in Mississippi. But, yeah, and so they understand the fundamentals. And it's funny, we were talking off air about something, about how analysts have a target price, and we have a target price on these stocks. And it's so interesting because this generation is so tied to short-term investing, and I'm making them come up with a 12-month target price. And they're, you know, I had a student say to me, 12 months, that's like 3 girlfriends from now.
But put one on the side and do your report first.
Absolutely. That's not going to get you out of this problem here. So it isn't. And the target price, by the way, is the highest price you think it'll reach in the next, over that period. Most people do 12 months. And but you get to know you. We go out there and kick the tires, which is what people used to do. You know, they're not just trading a ticker symbol. And you go out there and you meet the people that are running these companies. And the most exciting thing that's happened, Andre, is since we started, we've been doing this 29 years, is we have had 58 of our companies bought out. And, you know, when they get bought out, they usually go 30, 40% premium. Just recently, you've seen in the last 15 months, you've had At Home, which was one of our companies, kind of a supersized home decor place. You've had Sanderson Farms is now being taken by Cargill and Continental Grain. LHC, which is a home healthcare company in Lafayette. And most recently, a company called Sharps Compliance, that is that company that when you get a shot in the doctor's office, it gets put into a little box on the wall, and they're the people that take that away in medical waste. So, but this is very exciting to see. You know, it's tough for the students because these are live companies. You know, you might be halfway through the report for the semester, and they make a big acquisition. It's like, well, I guess you should start again.
And it gives them great hands-on experience because when they get out of from Tulane and they go to an investment company, usually you start off as an analyst.
Absolutely.
And as an analyst, this gives them already the hands-on experience for doing it.
They tell us that our students can hit the ground running, which is what they like. And we've now had 1,100 students go to work in the investment field. So
you did something very unique with your students recently, and I would think what a great opportunity. You brought a lot of your students to Omaha, Nebraska, and sat down with Warren Buffett. What was that like?
That was incredible. It was like going to the Vatican. It was for
with
investing.
Warren Buffett,
And we flew out there and. It was the greatest experience. I do a lot of public speaking, so I meet a lot of famous people like Andre, and some of them are good, some of them are lousy. It's just the way you think. But Buffett blew me away. He was the kindest, warmest, most generous person I've ever seen, and he answered our questions. He also took us out to lunch and made us drink cherry Cokes because that's what he likes, and the wisest man I've ever heard, really. There were certain things I've never heard him say on the air, and it's really interesting. One of the things he's told us, by the way, is Warren Buffett, you always think of, is so comfortable and talks. When he in the late 50s, when he was up in New York, he knew he wanted to do what he does now, but he was so shy and so afraid of public speaking that he went to Dale Carnegie, walked by, wrote a check for $50 to get in there, and spent the whole next night walking the floors so that he could get up at dawn and cancel that check because he was so afraid of public speaking. And then a few years later, he went back again and he gave them $50 in cash just so he didn't back out of it. It seems so funny to think of Warren Buffett like this, but communications is the key to business. It really is. It's you could be as bright as anyone else, but it's the person that can get their message across. And of course, Buffett is amazing at that.
We're so happy to have Peter Ricchiuti. Don't go away because we're going to be right back. We're so happy to have Peter Ricchiuti with us. Peter, right before we went into a break, you brought up an interesting point about the media. And, with MBA students and their training, you're teaching a lot of young people that will one day be CEOs, CFOs. And today, when it comes to politics, and I'll just bring up two examples. Let's say Georgia, you've got the politics of the voting rights law. Or let's say in Florida, you've got the politics where the state of Florida, where you teaching about sex education for kindergarten. You can't for kindergarten, first grade.
No, I don't teach sex education. Is that what you mean?
No,
okay,
not you. No, not at all.
Just clearing that up. Okay.
That's a whole different business. Okay, all right. But but now as CEOs, they're scared to death of CNBC and other business reporters sticking a microphone in their face and going, "What do you think about this?" And they're afraid to saying the wrong thing to having their stock. Do you teach students on how to work with the media?
Yep, we actually have a course in that, and because the idea of I'm just going to hide isn't going to work. In fact, when you hide, it looks like you're guilty. So, no, you've got to learn to make those, create that message, and kind of stay on message. One of the things that when you mentioned the Georgia situation in Florida, one of the things we include in our reports, because this generation thinks is so important, is ESG, environmental, social, and governance. We want to know, where does that company stand? Are they doing the right things? For two reasons. One, just ideologically, but the other is, if you do the right things, you're not going to get yourself in trouble, getting caught in some web that you really shouldn't. You look at companies like Enron, MCI WorldCom, HealthSouth. I mean, those were disasters in the stock, and it was because they really weren't doing things the right way. And that's what you got to look out for.
HR. Human resources is huge in that right now, where you've got to now be very cautious of the CEO of McDonald's just recently had to resign, and also Vince McMahon,
yes,
the head of
wrestling
WWE.
Guy,
And he started the WWE. So they've been also having problems too. So it's a constant evolving and a constant change.
It really is. And I think they're some of it, is probably going to die down a little bit. I mean, everybody seems super sensitive right now. But it went on too long, particularly in our business, in the investment business. It was a male-dominated business. It was very uncomfortable for women to be in that kind of organization. And this is leveling the playing field, setting up rules and what's a reasonable way to behave versus an unreasonable way. I think it's actually very good really good for everybody.
For a while, you worked for the state of Louisiana with the Treasury's office, the chief investment officer there and such. And there's so many around the country, there are so many states that have pension problems.
Oh, yeah.
And I was just last week, I was reading where CalPERS of the California pension is going to be at a deficit this year, and they're going to be asking their members who work for the state to increase their contributions. Well, I know Illinois is going to be is more of a problem than California.
That's the 50th best, yeah, right.
So do you think that there's going to be more pension problems, not just in Illinois and California, that are having these problems?
I totally agree, Andre. People are worried about things I don't think they should worry about, like Social Security. I mean, we have a printing press. We'll be able to get you a check. It's not like that. But pensions, remember, they're not. They're backed by the state. When I was at the state, I always thought we ought to have our own currency, but we didn't. And so I think that's really the key. That's the biggest potential bomb out there. That's the time bomb is pension funds. And not so much corporate anymore, because everybody, that watching this probably has a 401k like we do at the university and such. But people that have pension funds, they're underfunded. They usually get the legislators don't want to fund them entirely, because that's money that could be used somewhere else. And if you have a little bit of a downturn in the markets, these things are going to be less and less funded. When I first got into the job, and we came from Wall Street and all, but I didn't know too much about the pension side, and they kept referring to UAL, and that's unfunded accrued liability. And of course, I thought, what did United Airlines do to these people that's so angry, And but yeah, that's the ticking time bomb out there.
You worked with the NFL, and specifically the New Orleans Saints, with NFL players. Now, I'm thinking of, let's say a young man is 22 years old, he's been in college, and now all of a sudden he's been given a check for 7 figures or more. And, you go on spending sprees. Now, you worked with the New Orleans Saints. What was the biggest, was it a big shock for you or was it a shock for them when you started talking to these players that you're 23, 24 years old, making $5 million, $7 million a year?
And a lot of them came from, nothing. Yeah. And so it was one of the things I would point out to them is that the way you and I make money, Andre, or everybody else, is we start out making very little and hopefully go up a little bit each year. Theirs is completely the opposite. They come out at 22, they make a huge amount of money, and then once their career's over, it just craters. And so you've got to save that money. And of course, what happens there is you've got the most money when you have the least wisdom. And, they're buying these cars and houses. I used to tell them a story that when I first got my first bonus check in the investment business, I bought a full-length cashmere overcoat because I've always wanted it. And that was the equivalent of a Maserati for them, something like that. But the other thing I would point out is the careers. We used to talk, like the longest career on average is a punter, it's 7 years, and a running back is 2.5 years. So you've really got to put this money away. And they have a tough time. They usually have a posse with them everybody's trying to get their money, and then families starting to chase them because they're the big breadwinner in here. But and let's face it, Andre, they get a lot of bad advice.
Wall Street Journal usually annually or semi-annually talks to business graduate MBA students. And some years, let's say investment banking is really big, that they want to get into investment banking. Some years, maybe it's internet. They want to start internet stocks, or they want to start their own company. Some years it's private VC, venture capitalists, and private equity. What's the feeling of business graduate students today? Are they more into investment banking or private equity?
They're more tied to working with the community. They're much more concerned about the environment. So that didn't exist when I was in school. So that's a real positive. At Tulane they have mandatory community service. So that's one of the reasons I think we're attracting so many students. But I think private equity is really the hottest area right now, and it's booming. The returns are still way above where equities have been, and I think that's the sexy end of the business right now. Of course, we have a few of those firms right here, Andre. One of the things is, here in New Orleans, you know, we complain about the potholes and the crime and everything like that, but, you know, I have a show on NPR called Out to Lunch, and we bring in 2 entrepreneurs each week and talk about the companies they're starting, and it's made me the most optimistic guy in the city. There are so many young people creating businesses and with lots of energy, and I have so much faith in the city. You know, right after Katrina, we became the #1 city in the country for young entrepreneurs, and it is just, the momentum just keeps coming. And we had you know, you look at some of the companies been bought out here. Lucid, which does sampling and polls and things like that, were bought up for $1.1 billion. TurboSquid last year was bought up for $75 million. Level Set, $500 million. People don't see this. And one of the reasons we started that show 11 years ago is that nobody seemed to know this. I remember I went to a friend's birthday party, and his dad came up to me and said, you knew what I did? And he says, you know, Exxon left. And I'm thinking, yeah, it was 1982, sir. We need to move on, you know? And so I thought telling people how good things, there's a lot of good going on.
I started the show by saying you are the kind of professor that people wish they had in school, and that's how I will end it. I hope you come back.
I'm right down the street. Call me anytime.
You got it. Peter Raschuti. Thanks, Peter. Well, if you've got a question about finance or a comment about the show, love to hear from you. Make it pithy, make it concise, and write us at andre@wallstreetwrapup.info. And now for a look ahead for market information for next week. But first, what Wall Street organization was founded on this day in 1869 at 11 Wall Street? We've got that answer in just a moment. Well, what Wall Street organization was founded on this day in 1869 at 11 Wall Street? The New York Stock Exchange was formed today, 153 years ago today. And finally tonight, if you have not bought your ticket for the Mega Million Powerball, it might be too late for tonight. It's now over $1.2 billion. But if you make you feel any better, the chances of winning were 302 million to 1. But it's not actually the largest. That was in 2016 when the pot was at 1.6 billion. But for those optimists out there, yes, there is that one chance. The next week, and next week, by the way, are you planning a family vacation for this August? If you are, don't make any plans until you see next week's travel expert, Bobby Laurie. Bobby is the co-host of the national syndicated travel and leisure show, The Jet Set, as well as he's the travel anchor on ABC's Channel 7 in Washington, D.C. What happens if your flight is canceled or just delayed? How do you get an upgrade to first class? How to get more points towards your hotel upgrades? Well, if you're planning a trip, you will want to see my guest next week, Bobby Laurie. And remember, as a reminder, we repeat the show on Sunday mornings. The best way, though, always set your DVR so you'll never miss an episode. And that's our show for this Friday, July 29th, 2022. I hope you've enjoyed it. My thanks so much to Peter Raschuti for joining us this evening. As always, it's you. We appreciate you for allowing us into your homes tonight. Remember, follow us on all the social media, on Facebook, now known as Meta platforms, and YouTube, WYES, and Twitter, WYES.org. So have a great weekend and a productive week as well. I'll see you next week for Wall Street Wrap Up. I'm Andre Laborde. Remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.